My name's Jonathan Philpott. I'm a partner of the Wealth Management Division. And before I introduce tonight's presentations, first of all, I'd like to say a very big thank you to you, our clients of HLB Mann Judd, for, as you can see, the award over here. 2014 BRW Client Choice Award for Best Accounting Firm. This is now the second year in a row that we've won this award, and we're very proud of that. As the name suggests, it is a client-voted award, and at the end of the day, our clients are our number one priority, so we very much thank you for your support.
My wife and I have been clients of Mann Judd for 12 or 13 years now. The most important thing to us was that the people that we worked with wanted to be part of our team. I have to say that we've been very pleased with the outcome of our relationship with Mann Judd. So for us, the relationship works, and we're looking forward to that continuing.
Now we have two presentations tonight. So the first will be on our approach to constructing a client investment portfolio, and that'll be presented by HLB's Chris Hogan. And the second will be an Australian share update with our guest speaker, John Grace, who's from Ausbil Investment Management.
So the first step in our portfolio construction process is determining what the client's trying to achieve with their portfolio. This involves an analysis of client goals. Goals include both financial and lifestyle goals. There's a number of structures available for the ownership of the investment portfolio. The decision's based on tax, accessibility, asset protection and simplicity. Many of our client portfolios are held in super. Super is just such a good deal tax-wise. Earnings are taxed at only 15% in accumulation phase and nil tax in pension phase. The biggest downside of super, of course, is accessibility. You really need to get towards retirement to have any access to it.
HLB Mann Judd have been beside me all my working life and now into retirement. I asked myself, what has made this relationship so special? And I think there are three reasons. The first is the continuity that HLB Mann Judd have provided. I've dealt with pretty much the same people over 30 years. I've had a very personal service and very professional service. It's been a great relationship, and I think there are many years to come.
We've come up with a strategy to combat sequencing risk for our clients. We start with what we call a risky bucket. The idea being that that bucket can be left alone for at least 5 years, producing the best returns it can. If we do get a poor sequence of returns, we don't have to touch any of those assets, so never crystallise any losses. No assets are ever sold at low prices. For around 25% of the portfolio, we have a secure bucket where we put our secure assets. This strategy works best in a self-managed super fund. Ausbil has been one of our preferred managers for many years, and I'm now keen to hear what John Grace's thoughts are on the prospects for Australian shares.
Thanks, Jono and Chris. Just quickly, I'm going to cover the macro environment, some of the market dynamics, some stats in the market, where our portfolios are positioned, and just sum up from there. What I'm highlighting here is that the global economy is improving. And if you break it down into various subsectors, most of these areas are contributing to that growth. In particular, we're very bullish on the US market and the US economy. There's lots of good things happening there, and I've got a few charts coming up. But we do anticipate upside to those earnings, those GDP growth forecasts of about 3% for next year. Japan is doing lots of stimulus to their economy. We're expecting some modest contribution there. Even Europe's turning around from a very low base and adding to the global growth environment. And China, I'll come back to China in a minute. China's still expecting 7 to 7.5% growth. We don't mind that. Reasonable for our resources, and I'll touch on that in a minute. And Australia, we're expecting upside to the current forecast of 2.8% growth. So there's no recessions being forecast out there by the experts at the moment. And on that basis, companies that operate in this environment generate better profits, and for us as shareholders, better dividends.
HLB Mann Judd have been managing my superannuation since about 2000, which is going on 15 years. Quality reporting and monitoring involves regular portfolio and market reviews which produce well-judged proposals and incomes, and they're very ably supported by Lonsec. Their correspondence is immaculate. So in our experience, their service can be summed up in just 2 words: totally professional.
Just touching on commodity prices for a moment, if the global economy is improving, you've got multi-jurisdiction demand for commodities.